The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out with the gold market today because we had a little bit of activity in there. When you consider a $40 per barrel drop after the high, what do we wanted to talk about here? Like we did yesterday, we were showing the fact that since the 9th of June, we've had these corrections. All were about $11 to $12. You can see those as marked in the little red boxes. They're very, very close. Sometimes they're $1 off here or there, but they're very, very close. And then we mentioned that after we hit that 13.17, the first time you got a reaction more than that $12, and that was something has changed, and that's where things really changed. Now, with this particular chart, if you remember, we went down to this 13.05 level, and then we went back up and we made a slightly higher high at 1318.9, almost 1319 per ounce, and then that's when we fell apart. 1305, if you remember, was the old high that we had, back on sometime in several weeks ago, wherever it was, and then that held. Now, what's happened now is the market broke its $40 and went right back down to that 382 level that we've been watching, once before, where the market held up, relatively well at that spot. So the thing we want to be really concerned about now is the fact that if we get to the 1297 level, that would be a 382 retracement of this whole move down. And if the market fails there, that tells us that this is a pretty strong indication that some type of a pretty significant top has come in. I do not believe it is the top for the year. This has too much of power. It's just acting just really as bullish as you can possibly ask for. And I really believe it's really got a chance, to make one heck of a move, to the upside after we get this correction out of the way. And maybe that $40 correction was it yesterday. We really don't know. It did stop right at the 382 level of the pullback. So that's another sign that that's nothing more than pretty good volatility, because we haven't had any volatility since the 9th. All of our retracements were about, $10 to $12. And what happened, we got one that was, a little more than 3 times that on Friday. But, the market been up for so long, you shouldn't be, be surprised that you get something like that happening, especially when you're not making new highs in silver. And then also the fact that the index for the what do you call that, gold silver index also was showing indications that it was into an area where it was going to have a little bit of a problem, because all it did was go up and make a little slightly higher high than the previous highs that we made back in April by just a little bit, and then reversed and closed lower. So that would be another, and that was right at the 78% retracement of the high we made back in 2014. So maybe there's a nice tradable top in here in gold, but we'll have to wait and see. The safer trade, of course, is to, if you're only following it, of course, on a daily basis, a safer trade would be wait for a really good correction of about $70 an ounce, and then you'd have a pretty good chance of, that would get you down, to the 1230 level. That would give you a pretty good chance of looking at some pretty good spots to be a buyer at it. But right now, I think the gold market is more of a sell mode than anything else. Now, we do have another market that's very, very important right now, and that is the crude oil market. We have talked about this at the beginning of the week. And when it made its high up there at the 1.618 expansion level and also the 61% retracement of the whole move, we were looking for the market to come down to 45.70. We got to 45.97. Yesterday, we rallied about a little more than $1 a barrel, but that level was very, very close to the exact 61% retracement. And it was absolutely spot on to John Logan's support zone at $46 a barrel. So this should be a pretty good rally. Again, we would be looking for oil to rally up into this $49 per barrel level. In other words, $3 a barrel over the next few days. And if that's all that it does, then that will offer another selling opportunity in the crude oil should we fulfill that particular pattern. So that one is looking interesting, but not right now. It's just basically you want to wait for another rally to sell out or to sell more, or get back in again, either way you want to put it. But that's the main thing, is to just be ready when it does happen. And, it's nothing to get a $3 or $4 barrel rally in crude oil. You know as well as I do that these things have a tendency to jump around quite a bit. Folks, I spent a good deal of the time this week talking about the potential top in this interest rate markets, and I'm even more convinced than ever that that's what we've got going on here. The $64 question is, how much more is it going to go before it finally turns down? We've had some really interesting things, happening in the German market. Of course, when we went up and we matched the highs, we did exceed the highs in the Treasury bonds. We did not exceed the highs in the Treasury notes. The Treasury bonds were able to take me out with a small loss, but I'll keep trying. And all I'm doing now is waiting for an intraday pattern that gives me a very low risk, potential for profit. We did make the old high of 171. We took that out by just a little bit, and then we reversed by 200 points or two handles. So that's another indication that this market is a little bit, it's not nearly as strong, because if it were that strong, there wouldn't be any selling up there. There'd be nothing but buying, and that's not what we're seeing. The open interest is also telling us the same thing, that there's not a lot of new players coming into this market. And frankly, I don't know why they should be. If you look at this thing on a really long-term basis, it would be flat out scary. I wanted to show you here the long-term weekly, because we did go up and we took out that high that we made several months ago. We did not take the high out in the notes. We only took the high out in the bonds. But if you'll take a look at this, we had some really beautiful symmetry here, but with the excitement that we had, we did make a new high above the 171 level. We hit 171.02 in the bonds, and that was a little bit higher than we were expecting. We were expecting around 170.25 or so, so it did go a little bit above it. But the key is to watch this first correction that we're going to have, and we've already started, we're down 2 points from the high. So what we want to do is to watch to see what our rally is going to be back. And believe me, I wouldn't do anything until we get through this weekend, and the 20th coming up, which is the full moon. And we have Neptune is in retrograde now, which is going to throw a wrench into a lot of this stuff. So we'll have a really good plan here coming into Monday, and we have Brexit, of course, on the 23rd. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I'm going to expand on this gold a little bit because it is really one of the best things to trade. Of course, the euro is number one. Crude oil is probably number two. Bonds are number three. Maybe the S&P would probably be in there 4 or 5 or 6, somewhere in that ballpark. But gold is by far one of the very best because it has huge volume and has a really good contract size of over $130,000, which means you get a lot of bangs for your buck. Your margin is relatively small, and you have tremendous liquidity and ease of access into the market. So what we're looking at here in this gold is the fact that you'll notice that box up there was the one we talked about previously, that once that we took out that reaction. In other words, it reacted $12 down from the high, much like it had been doing all along. But once we went below that, that would tell us that that would most probably mean that something has changed. And as you'll see, it went up and made a new high. And then when it went back below 1305, that was telling you that there was something rotten in the old gold market. And that's when you had another break of another $30, taking you down to the 1280 level, which was, again, really strong support down at the 382 retracement and very close to that harmonic number that we look at in gold of $34. So what we're watching now in gold is to see if this 1295 to 1297, which is the 38% retracement from the high at 1319, is going to cause resistance. And if it does, then that tells us that we're going to have more of a correction to the downside in the gold. But we're watching it closely. If I see any indication that we're at a major spot in here in gold and silver, I will certainly bring it to our attention, and then we'll see whether we're right or not. But remember, all this is based on probabilities. I'm not doing anything with fundamentals. I do watch the open interest and things like that. But as far as what they tell you about on CNBC or Bloomberg, I really don't pay too much attention to that. So, we'll just, do the technicals. That's really the main thing, because they can give you misinformation, they can cheat you, they can lie to you, but the one thing they can't do from you is hide. If there's more buying, prices go up. If there's more selling, prices go down. You need to know more than that. And try to want what the market wants. If the market wants to go down, go with it. If the market wants to go up, go up. Yesterday was a perfect example in that Japanese yen. I mean, starting in about the middle of the night last night, I mean, it was, or night before last, it just literally, gave up when that Nikkei was down more than 300 points, ended up being down 500 points. And, so these are the ones that, when these trends start, try to catch a falling knife. And that's the main thing. Now, with the Treasury bonds, I don't think we were trying to catch a falling knife, trying to pick that high yesterday. We sold it perfectly. It broke 1.5 and then it went right back up, stopped me out at break-even level. And then I'm going to wait and see if I can get back in it again. That's, what I'm looking for. We did have a really nice bottom in the S&P yesterday that we had talked about, several times. We'll bring this up and let the folks take a look at it, because it did exactly what we expected it to do, to get down to that 2043 level, which was the ABCD pattern, as you can see from the chart. And our low was at 2041 and a quarter, I believe, something like that. And it was interesting that the June S&P that is still trading actively did get down to that 78% level. It was actually a tad weaker for a few seconds, and then, of course, reversed, and then we had the really strong rally. Now, what we'll be looking at for today, it looks like we're trading at around 2068 pre-market, somewhere in that ballpark. 2066. What we'd be looking at now would be a situation where you would be looking at a 61% retracement coming in at around 2083. That would take out the highs of the previous day and also the highs of Wednesday, and it shouldn't get any higher than that. Now, if we don't get any higher than we are overnight last night, then we've got some type of a problem, because all that was going back and touching the old lows at that 2075 level. So we need to get this market, if it's bullish, we need to get it above that 2075 level with a little bit of gusto, which would take us up to that 2083. Now, should we get above 2083, folks, this thing could really get moving. And the reason for that is we've had very little volatility in the stock market. I mean, almost none, which is not a good sign. You really need volatility, because it means you don't have a lot of players in here. And as we've seen before on some of the statistics that we've seen being posted in the den here, that there's a lot of stock traders that have left the market, and most of the market, they say, and I'm not sure of these figures, but I'm just hearing what I have reported before, and that is this high frequency trading and algorithmic trading is about 70% of the volume in the market. And I'm not sure if that's correct or not. All I know is that once they start in a strong direction, you'll notice that they keep going, for quite some time. We were really strong down. We were down 20 points in the S&P. Then the market turned, right at that ABCD pattern, and then went straight up. And the old adage is any market that can give you 30 handles can take 30 handles away from you. So don't let that upset you if you see something like that, moving along. And that's the main thing. Someone's asked a question about that support in the gold. Let me show you what we were looking at, because this is this was the chart from early yesterday, the day before yesterday, excuse me, go back on the 14th, that was 3 days ago, that we had really strong support at that 1280 level, and that's when we took us from 1280 up to 1319. Also, there again was your harmonic number. It was $39. The harmonic number is 34, and believe me, there's not much difference between 34 and 39 in the gold market these days because of the way that it's jumping around. So that's another thing that we're keeping an eye on. Okay, now we've had a question about the bearishness that I expressed in the Nikkei yesterday, and I have to tell you folks, this is probably one of the clearest patterns that you could possibly have. This is the Nikkei Dow going back the last 10 years, and you'll notice that we did make that high up there at 21,000 and not quite 21,000, which was a big ABCD pattern. It was also a 38% retracement from the high that we made back at 39,000. I believe it was 61%. Yeah, it was 61% at the from the 39,000 level that we made back in December of 1989. But the important thing here is you'll notice that ABCD pattern that is formed several weeks ago. That was exactly at the 382 retracement. It was a perfect ABCD. In other words, if you measured it and saw the structure in between, which I've tried to show here, that sets up it perfectly. And now we've gone down below 15,400. We rallied 100 points last night, in a little bit of a dead cat bounce, but we're below the 786, and any weakness coming in here below 15,000 even sets up a target of 11,700, which is down another 20%, and that's just the guess. That's not an expansion or anything. That's just the ABCD pattern forming itself. The key to this whole thing is this cycle failed at the 382 and is already breaking down. Not a good thing. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I wanted to talk just a little bit about this Dow Jones Utilities chart. As you can see, we're making a really nice butterfly pattern up here at the 1.27 expansion. That's just make a little bit higher high. We almost did it yesterday. We missed it by about a point or two. So it looks like it has a chance here to still make it. But we need to, if you're bullish stocks, you really need them to be moving to the upside. And I'm getting more and more bearish every day because of the fact that, we had this NASDAQ indication where this market, stayed at the 786 for so many days and then finally gave up the ghost and, had a pretty good break down in this area. So my assumption is we're going to be probably sideways to quiet today. And then when we come in on Monday, this is going to be one heck of a week coming in on Monday because of the fact that we're going to have a full moon coming in on the 20th, and we have this Neptune is in retrograde motion, which is really important. The reason why it's important, folks, going back to 1982 on August the 9th, that's when we had Uranus going direct. That's one of the planets of expansion, and that was the start of the big bull market in treasury bonds. That's when interest rates finally topped and have been going down for 34 years. So these planets are really important for these longer term cycles, as our good friend Bill Meridian from Cycles Research and also Norm Winsky from Astro Trends. And so those are very, very important spots to look at. And that's why when you look at these patterns, and that's what I'm looking at, are just the price patterns are all completing. I mean, we're getting completion patterns in the notes, the bonds, the German Bund, the utilities. All of them are just lining up so beautifully. And I'm a little early. I'm always early, but never late. But the one thing we want to remember here is this utility index. Going back over the last 20 some years, and this chart is from our good friend Jim Bartolioni. You'll see that we have the same pattern going on here that we had in 2007, where we made a slightly higher high into that October timeframe when the Dow Jones topped and then gave back 60% of its value. And now we have the Dow Jones Utilities doing exactly the same thing again this year. So we need to pay attention to this pattern as it's forming up into here, up in this level. I did the charts on Duke Energy and some of the others, but frankly, I don't think it's going to make a whole lot of difference. The other chart showing this three drive pattern going back to 1942, which is a long time. I was just a little squirt. I was 2 years old back in those days. Yeah, was I still trading at 2? No, I didn't start trading until I was 4. Okay, you'll see that the Dow Jones Utilities here are also right up against that third drive there, and that's going back to 2000, and so that's going to be a really big pattern. I think we're close, but really remember this thing that we got going on with quantitative easing is a giant experiment. No one really knows what's going to happen with it. The Federal Reserve has increased their balance sheet up to $4.5 trillion at last speaking. And remember, the boys that run this Federal Reserve, they're long the bonds. And what have bonds been doing? They've been going up. So their balance sheet's got to be in pretty good shape. They're not short this stuff. They do, and not only that, but they're getting paid interest from us. So that's pretty much what's going on here. Okay. One other question someone's at, we'll get off the bonds for just a second, and this but was about the grain markets. We're having some good volatility in the grain markets. As you know, we're starting to grow. We're into the growing season now, so we're going to have some really wild swings this year. We've already started to see the wild swings, so we're watching them very closely. Now, wheat has been a little weaker than everything else. Corn has been one of the stronger, along with the beans. But the meal has come off over 10% this week. And so this is an important fact that the meal had been the leader the whole way, the soybean meal. And so that tells us that they're probably getting ready to have a little bit of a correction in here, which we certainly should see. And with the full moon coming in, that might give a really good buying opportunity in some of these grains if we get a really nice sell-off. So Monday's going to be in fact, the whole week. In fact, one of the things, if you get a chance, listen to Steve Banger on John Logan's show. He's really a really smart guy and has some really good ideas too. And of course, so does John. And then of course, Basil and Steve, all you guys that do this stuff, it just totally amaze me at how well the information that comes through TFNN, works to help the folks in here. And we've got people, in the room that are just incredibly, the posts that they give are just absolutely mind-boggling. And especially Mr. Z, who does a really super job on just about any of the commodities, and the other guys that are in there also give good information. So it's a good place to get good information, and it's all trading information. So that's the important thing here. We're trying to make a buck here and there. So that's the bottom thing that is going on. So I want you to keep in mind, folks, on this gold, because this is the prize. I want to show you this long-term chart in gold because I think this is the one we're looking at, folks. I really do. As you can see, I updated this a week ago. We were trading at 1276. We've since gone up to 1319, and now we're trading at 1292. So I believe we're heading up to at least $2,300 in the gold. I don't know if it's going to happen right away. It probably take more than a year to get there. But if this thing really starts to accelerate, if you'll remember, between 06 and 011, we doubled in price in 5 years in the gold market. And this is not a bearish chart, folks. This is going back to 1975. Actually, 1975. We start trading the gold in 1972. And as you can see, we just made that little retracement down here at $1,030 per ounce, which was a 50% retracement, and it was also one of those 20-minute lines that acts as really great support. So this is what I think we're seeing in gold, and I always recommend you buy a little silver. Just buy a little silver and put it away, and we'll see what's going to happen with it, and we'll go from that level to look at it. Now we've had one other question about the cattle market, and I know the cattle market's been under some pressure in here, but we're down into this 112 area that our good friend Rich Anderson, who we're going to have on the show hopefully next week, will be on to talk to us more about the cattle market. I hardly trade cattle anymore, maybe twice a year. Used to trade it almost every day, but with all the currencies that we have now, it's certainly much easier to trade the currencies, and a lot more volatility and a lot more profitability, because you get such huge swings, and all you have to do is catch a little bit of one, and you certainly have a really good spot to be in the currencies, because they have some incredible moves, and that's what we look for, is some moves that work in our favor. That's the key. Okay, now see, we had a question about Priceline. I started an orange chart this. The chart, the first of the week. Let me get right back to you, and then we'll be right back with the Priceline chart after this break.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited-time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, Visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, folks, I want to talk a little bit about Priceline. We had a request because I posted this chart yesterday. Basically, what it's showing is the three higher highs at the 786 retracement. You know that they're all equal, and then the market broke down. All it's showing at that point is that at the 786, it hit it 3 times. The times between the highs were absolutely perfectly symmetrical, and those are the kinds of things that you'd like to see, because when you have the symmetry and the time and the price together, you have a really good spot to put a trade on. And if it starts to move against you, you know that you're wrong. This was the equivalent to what we were looking at in the Japanese yen once we went below that 105.50 level. And of course, we did break several hundred pips below that level. So what we're looking for is when we see this symmetry, that's the ideal situation, that we like to see as that comes up. So give me a second here, and I will try to get my next chart, which is going to be the silver chart. If you'll give me 1 second, and I will get it ready, and I should be okay. And you'll see that the silver did not make a new high on this last run. It had completed the ABCD. We went above the 786. We went all the way up to the 0.88 level, which if you get below a bit beyond that, you've got a high probability of making 1.27, but we were not able to do that. There's another reason. We're up 2 straight weeks, so to have a nice correction here would be a very, very welcome thing in the silver market. And there should be some strong support at $16.60, $1 an ounce higher than the high that we made yesterday. But I keep saying this, and I've been saying it since silver was $13 or $14 an ounce, is to buy some silver rounds, folks. And those 1 ounce silver coins, they're beautiful coins to have. If you have children or grandchildren, they give you a nice story of our founding fathers and stuff, and all that kind of stuff. But they're beautiful numismatic coins, and they have value. If you have the money to buy gold, then that's even better. But if you don't, just try to have a little silver no matter what happens. I buy them just through coin dealers. They have still in Philadelphia. We'll be heading back to the old ranch out in Tucson, the ranch. our full townhouse, but it has 2 patios, but it's certainly not a ranch. But we'll be going back to Arizona next week, and we'll be there for a few more weeks, and then we have some fun time that we're going to be having some fun. Okay, we have fun everywhere. But anyway, if you just go to any coin dealer, they usually charge about $1.50 premium. So if it's silver is trading at 17.50, you're probably going to have to pay probably $19.50 to $20 to buy the things. And try, if you want a legitimate coin dealer, make sure he's registered with the ANA, America's Numismatic Association, or PCGS, the Professional Coin Grading Service. But they're not, they're not there to rip you off. They're pretty fair most of the time. So, but you just shouldn't have to pay more than a 10% premium to buy the silver in the coins like that, because it's a really beautiful coin, and it's really worth it. I mean, I have them. I have them all the time. Hey, Sarah, Arizona in the summertime is not that bad, Duffy. We're at 2,500 feet. We live in the foothills of the Catalina Mountains, so we're a lot cooler than you see in Phoenix and other places. So it's not nearly as bad. And we do have the monsoons are starting anytime soon, so we'll be looking at something to enjoy, because we get rain every day in Tucson during the monsoon season, which is a couple of months, and it makes it very, very unusual, because this rains come in and they're absolutely awesome. You just can't believe how much it can rain at any one particular time. Okay, question someone's had about the oil market. I mentioned earlier that we did come down to almost the exact retracement that we made back in March, and that's exactly what happened. We came within 20 cents of the exact low, and that low was at 45.70. We got to 45.90. Now we're trading at 47 and change. If we get to 49, and it takes 4 or 5 days to get there, then you'll be able to possibly sell it short and see if we have another leg to the downside, because I believe that high we made at $51 a barrel just 3 weeks ago, being the major 61% retracement on the long-term, daily charts and also weekly charts, happen to be also perfect in the heating oil to the exact penny, tells us that is a major, major top that has occurred. Now, if we get above $51 a barrel for some reason, then, all bets are off. But right now, it appears that oil is still heading down. Well, at least we're in a rally mode, but I think we got a chance to go lower, but we need to get this rally out of the way. If we don't get any higher than $48 a barrel over the next few days, that would really be negative, because there you'd only be making a 38% retracement, and then you'd be able to, to look at it. So that's what we're watching from a pattern recognition standpoint, and we'll keep that in mind. One other question someone's asked, which is about the sugar market. I'm not really interested in the sugar, because there's, the guy that's really good at that is Andy Heck. He's really got some really great information, as does Steve Rhodes does too. So listen to their shows and ask them about it. I really don't trade the softs anymore. That's the understatement of the year. I don't trade the softs anymore. Cocoa, coffee, and sugar. I put a sugar trade on maybe once a year. And, that's basically it. You don't really need it when you've got the currencies and gold and silver and copper and all the cross rates. The currency cross rates are the greatest things in the world to trade. So I don't really need the softs anymore. They're much fairer to trade now that they're out of the pits, that they're all electronic. They are very, very fair. They used to be terrible, because everybody in those pits were related, and boy, they did everything in their world to try to get in your back pocket. But that's not the same thing. If a person had to pick just one thing to trade, Duffy, I would pick the euro versus the U.S. dollar. That's what the little Princess Sarah does, and believe me, she knows that thing by the back of her hand. And I don't know if the Federal Reserve people follow her, but boy, she sure knows spot on when it's time to buy and sell. She's not right all the time, but she's a heck of a lot smarter than well, she married me, so maybe there's a big question mark about that. But she does know the euro. That much we know for sure. Okay, let's get back to the stock market. There should be strong support, and I repeat, there should be strong support in the S&P down at the 55 level. That's 7 handles from where we are right now. At 2055, we're going to have a 61% retracement. That's also equal to the low that we made back on the 14th. Then we made that 1.618 expansion yesterday down at 2041. Then we had a nice rally of 35 points. So 2055 is going to be very, very important. Anything below 2045 today, coming into a Friday, sets up some really nasty stuff for Monday. And with this full moon we've got, I'm expecting some pretty big stuff to happen. So 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. We're going to wind up the show for the week here. Main thing we want to remember is the foreign markets across the world have been hit badly, as we mentioned at the beginning of the week, and we focused on of course, the Nikkei, which is the third largest economy in the world, and it's spelled Nikkei, not the way that I have it spelled on the chart, which I will correct this weekend. But these world markets are in big trouble technically. I don't know much about that's the understatement, but I don't know anything about the fundamentals. All I can tell you is looking at that chart is they're going lower, all of them. Unless they reverse from here, which would be one giant surprise, which is possible, but that's what it looks like. And even the German DAX, even though it's held that 61% bottom yesterday and rallied a little bit, even longer term, it doesn't look that well, either to see. And we'll see what's right, see what's going on with this. But we got that exit thing with Britain that's going to be crazier than a one-arm paper hanger. So we'll see who's going to be the tallest man in the land of midgets, as Steve Bangor would say. And I love that quote. I think that's just like the one eye in the land of the blind. The one-eyed man is king. So we're going to find out next week. Get a lot of rest, folks, because there's going to be a lot of rocking and rolling in these markets, currencies. Metals, everything's going to be shucking and jiving, so it'll be a lot of fun to be involved in some of this stuff. We want to be getting short these bonds again. I'm going to try it one more time. Well, I'll try more than one time, but watch that. The other thing is that the silver, the gold hit the exact 382 retracement. We've rallied, $14 off the bottom. And that's if we get any above 1296, then we could go a little bit higher up to 1302. But I believe we're in a corrective mode in the gold market now for a while, based on the fact that reversal we had of $40 and we haven't taken any of it back yet. So that tells us that we're still quite negative. The Japanese yen versus the dollar still looks like it wants to go higher. So we'll see what happens. So have a wonderful weekend. Live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.